Here to break it all down is Michelle Meyer, head of U.S. economics for Bank of America Global Research. Michelle, the simple question for you, first of all, what was your number and how did economists get it so wrong this time?
So we were forecasting 950,000. So clearly it was a big disappointment relative to our forecast. Now, when we think about the forecast and when we run our models, there's a variety of different indicators that we look at. We do look at some quote unquote hard statistics around initial jobless claims. And then we look at a whole lot of surveys, including the Conference Board survey of labor differential, what small businesses in particular are saying, some data from the Census Bureau on the Census Pulse survey. There's a lot of different indicators there. And you know, it really was mixed heading into this report. Some of the surveys were very cautionary around the report. So when we came up with our forecast, it was kind of splitting the ground between what we saw from a lot of the high frequency indicators.
So Michelle, I love getting economists' take on this because whenever we talk about numbers like the jobs report, it becomes oftentimes a partisan issue. People like to spin it either way. We just heard President Biden trying to justify some of the numbers as well. I wonder from an economist's perspective, what do you think was behind that big miss there? Why only 266,000 jobs, given all of those data points that you're looking at?
So I think that there's a few factors. The first one I would say has to do with labor shortages, which, Dom, you alluded to in your opening. You have a lot of surveys suggesting that businesses are out there actively trying to recruit workers. There's reports of very high job openings across a number of industries, even those industries most hard hit from the pandemic. And I think that the economy just has to transition. There's a lot of friction in terms of getting people back in the labor market and back in the jobs that they had before, something similar to what they had before. So there could be some skill mismatch. There could be some challenges in terms of the reentry rate. And I think that's creating some issues in terms of getting the actual numbers for job creation. If that is the case, if it's due to labor shortages, more a supply side issue than a demand side issue, then I think as we look ahead to the next few months, we should see job creation ramp up again because the demand is there for workers. And that, I think, is really important. The second more wonky response has to do with potential challenges around seasonal adjustments, but I won't get into that.
All right. So yes, we have heard some of those explanations about this.
Shepard Smith here. Thanks for watching CNBC on YouTube.